Let's get back to the energy sector. And this is your market today. WTI and Brent were down 84 at 84.88 and 81.92, just as we get into the whole issue around the assassination attempt over last weekend with former U.S. President Donald Trump. Then you've got Nat Gas trading 4% lower, $2.23. Gasoline trading $2.49, down by 88 basis points. Just give a summary of that. Dollar is where things are moving right now. But let's take with the commodities place. The West African economy of Liberia is looking to join the League of African Petroleum Producers as the country presents investment case for its hydrocarbon projects to the global business community last week. The forum was the Invest London Roadshow, the brainchild of the African Energy Chamber and its key partners. Let's take excerpts from the evening that features a presentation on energy transition, as well as a panel that showcases business case for some African energy projects.
Over 125 billion barrels of proven crude oil reserves and 620 trillion cubic feet of natural gas. Abundant resources to bolster energy access and long-term economic growth. Yet, to achieve all of this, we require over $200 billion of financing every year. This is a very substantial gap for investments. Where will this money come from? That is the question. That is the devil in the room. That is why institutions like us, Premier Invest, play an instrumental role in advising clients across the industry, financial and strategic matters. And this evening we'll attempt to unpack how we can put together strategies to help bridge this financing gap in Africa. Currently, Africa receives only about 5% of all global investments with access to funding. My colleague from Standard Bank said there were several sources of funding to Africa. But yet, due to global shifts in renewable energy and other macroeconomic influences, there is a significant decline of capital going to Africa. We saw in the last 2 days, 2 African sovereigns have been downgraded, which means that their cost of borrowing only goes up. To address this financing challenge, after over 30 years in the industry and after having financing over $300 billion of oil and gas transactions, together with a number of colleagues, we've put together an African-owned and an African-managed investment banking firm, Premier Invest, to offer a range of financial advisory services supporting clients across the industry as they seek to invest in small, medium, and large-scale projects, leveraging our very deep expertise across the industry and geographies, and support projects with lots of financing insights. We bring strategic advice to mergers, acquisition, for all kinds of oil and gas transactions. We are the gateway for African players to unlock capital for their projects. We partner with public and private corporates, and we've closed more recently, some of you will know, a large transaction for a national oil company in Central Africa for over $1.2 billion last month. African governments are heavily dependent on oil and gas revenue to meet their socioeconomic obligations. 50% of oil product consumptions in Africa will be fulfilled by importation, as there's no new investments to upgrade either our refineries or to modernize our facilities. The continent lacks funds to finance its oil and gas projects. The continent also needs technology to manage its oil and gas industry. The oil and gas infrastructure in the continent is unable to sustain the industry. Thus, production doesn't run at its peak, whether it's in Central Africa or it's in West Africa. the continent is largely dependent on imported products when it is actually a net crude producer. We have over 600 million people on the continent who live without access to modern energy. Oil majors, however, are making strong commitments to reduce their emissions in line with the Paris Agreement. A lot of them have set up renewable energy desks. IOCs are beginning to invest in sustainable energy in Africa alongside traditional oil and gas investments. Most of the critical capital pools are pulling away from oil and gas. In spite of that fact, Africa is experiencing robust M&A activity across its oil and gas industry, owing largely to new discoveries that are being made in countries. We've spoken about Namibia, we've talked about Liberia, and other places like Angola. According to the Africa Energy Chamber's State of the Energy 2004 Outlook, which most of you have seen, in 2023, investments in Africa reached about $3.2 billion. While this figure falls short of the transactional weakness in previous years, upwards of 2024, we extend to see this trend growing as further commercial success has happened across Southern and West Africa. I'll mention just a few. Namibia, beyond Namibia, we have Abu Dhabi, which has acquired Galp Energy's 10% interest in Mozambique. Total Energies and Qatar Energies acquisitions also in South Africa. The recent Assala divestment of Carlyle, with Gabon Oil now preempting, that will also need some investment. ADNOC announcing that it's going to acquire Galp's 10% in Mozambique. And ADNOC again acquiring and boosting its investments in LNG in Southern Africa.
Just to give the audience a little bit of background, Liberia has two major basins, and they have quite different geologic features. There's the Liberia Basin, which goes over towards Sierra Leone, and then there's the Harper Basin, which goes over to Cote d'Ivoire. Interesting players have showed huge interest in both of these basins. Exxon and Chevron and Anadarko have all historically drilled in the Liberia Basin. If I'm not mistaken, Harper has not been drilled at all. In light of our time, I'm going to ask you the impossible question, and you're going to fire me tomorrow as your advisor, or tonight. If you could only invest in one of the two basins, which one would you invest in, and why? Oh, let's see if I have my job tomorrow.
Thank you for the question. So a part of me is saying the Liberian Basin, and another is saying the Harper Basin. And so I would just advise you to just go for both of them.
Well done, Marilyn. Look, I think that's right. I mean, so the Liberia Basin has had the interest of the majors and it's more de-risked, whereas Harper has the better opportunity. That's for sure in terms of better quality fiscal terms, because we want people to get in there. Paul and Oliver, if you could speak on behalf of the investors to the Marilyns, to Paul, to the Olivers of the world. You've told me where you want to invest. What are the critical things you want? What makes you actually write the check? You're a check writer. What makes you get your check back out, Paul? And what could Maryland and Liberia and the other frontier countries do to get your checkbook out?
Well, today, banks can't do exploration because it's not a safe investment for our depositors. But there's nothing to say we can't do fast development. And my guess is countries like Namibia will be doing this in the next couple of years. What we look at is the same fundamentals as Oliver does. It's the rocks, it's the G&G down, but then above ground, it's the above ground risk. And as we're banks in a country, we are ultimately regulated by the same government you're taking an investment risk on. So the above ground risk is something we have an acute view and understanding of. We have significant amounts of money in our case to put out to projects. Mozambique LNG is about $500 million. We're out there. We put numbers out there for Rovuma LNG and lots of other projects, including Oliver's company and companies like that. We put significant numbers on. What I would generally say, just giving a little bit of numerical jargon, in most of the African countries we're present, the market's banking limit is about $300 million for any single deal. In our jargon, it's called the
Wait,
SOL.
can I ask you to say that again? For all of you listening, his limit is $300 million.
The market in a
The
country.
market,
Yeah.
even
So-
more serious.
So what that means is, unless you're Nigeria or South Africa, which is near $1 billion, that means all large oil and gas projects need funding from multiple sources. But raising money in country, getting up to that 300 or something like that, is often one of the most important things you can do as an investor, as a borrower, because then you are allowing the country to have skin in the game, for its banks to have skin in the game. And ideally, as country X grows, X could be Namibia tomorrow, but it could be Liberia the year after, things like stock exchange and pension funds get involved. And that's where the real economic growth happens, because the country is recycling the investment that the fiscal take it gets from Oliver & Co. into the country's banks, into the pension funds, and allowing the citizens to gain a meaningful stake in oil and gas. Yes, Qatar, Abu Dhabi, and so on are good examples, but almost certainly Guyana will be the next one.
I'll start with the checkbook, because of course as an E&P company, ultimately we're stewards of other people's money, so it's our shareholders, it's the bank if we're using their money. So ultimately very similar point to Paul, in that we'll deal with the subsurface, we'll take that risk, that's what we do, but we absolutely need stability of contract. So you go to sign an exploration contract, a PSC, it's early days, everybody's excited, but you haven't found anything, but you're actually signing a, say, plus or minus 25-year contract, right? You're baking in at that point a future that nobody quite can see or can at least get a quantify, if you like. So the stability of contract is there, and I think what is really important within that is there are going to be winners and losers in the countries, right? If, as capital gets harder to access for the sector, which is happening and will happen, when we go to the banks and we go to Paul, we'll know exactly who they want to fund from a country perspective. There's not much we can do about that, except we will choose to be in the countries that we feel will offer that stability. Not necessarily the best terms in terms of rewards for us, but the stability above all else, such that we have a bankable project. And we don't control the rules of what's bankable, but we have to work within those. And so that's absolutely critical. I would just say one word is stability.
Stability.